You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app, or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean only one thing. Yes, it is time for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. It breaks down the week that was and indeed still is on the futures options side of the fence. So talk some equities, maybe some ags, maybe some energies, fixed income, FX. You never know. Lean hogs, you never know what's going to make it on the program each week. So you got to tune in every week. Keep sending us those questions, those comments, those products you want us to talk about, because we do indeed love to hear from you. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Pleased to be back in the old studio yet again. I was in D.C. a couple weeks ago. I was in Florida last week. Here we are back in the studio, and I'm all doubly pleased, listeners, to be joined in person. It's a rare in-person treat. Speaking of treats, I did hear a rumor we have some delicious treats available for after the show. But before we get to that, I am joined in person by my old friend, my cohort, my partner in crime, holding down the FTSE Russell hot seat, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the program. Good to see you in person again, sir.
Great to see you in person too, Mark. It's great to be here. Thanks very much for having me. It's always good to be here. And it's good to be back home again.
Yes, it is good to be back home. And you know, Sean, you have, I would say you have one of the less enviable travel schedules. It seems like in between these personal appearances there in the studio, you're off to the hinterlands of Asia and up to the frozen north and down to South America. So regale us, sir. Where have you been since the last time you and I chatted in person?
I've spent quite a bit of time in New York visiting clients and other index folks within FTSE Russell, talking about product and product ideas, sharing derivatives knowledge with the sales force of FTSE Russell. I've been to Toronto to do the same. We have quite a team up in Toronto, Canada. I just got back there. It's still warm there, and the colors are still green. So there's going to probably be a mass exodus of leaves and things there in the very near future. I was pleasantly surprised. I was all planned to have winter up there, but the weather was kind of nice.
And what does FTSE Russell do up there in the frozen north, sir? A big FTSE Russell presence up there?
We do. We have a strong presence on the equity and fixed income side. Real strong on the fixed income side, and we have a great sales team. We have a gentleman named Paul Bowes who runs the country for us. Is head of Canada. Fantastic host, and we had some good client meetings and some good internal meetings with the team there.
Pretty big responsibility. So it's pretty much the head of PM of Canada, and then your guy, number 2, right there, running the country. So it's impressive. It's a broad reach for FTSE Russell over there. Well, Sean, tell you what, I'm going to regale us with what's been moving and shaking this week, and then you, as our in-studio guest, get to pick where we start. All right. So put your thinking cap on now while I break down some of these names. Well, first off, I'll let you pick. Do you want to start dark side or light side? The upside movers or downside movers?
I'm a bullish kind of guy, so let's go upside, please.
I had a feeling you were going to go that way, but, I never want to put words in anyone's mouth. All right, let's go upside. Let's start the top 5 movers. Again, these are just net movers since the last time we all gathered here together here, listeners, in terms of the future, the underlying movement. It's not vol, it's not open interest, none of that stuff. It's just straight up what's moving and shaking this week over there on the CME platform. Number 5, seems like a bit of a theme this week. Number 5, listeners, is Oats. Oats up 5.75%. Number 4, wheat, up about 6.2%. Number 3, lumber, up about 6.4%. Number 2, KC wheat, good old Kansas City wheat, up about 6 2/3%. And number 1 with a freaking bullet this week is the lone energy holdout here on the top 5 here, nat gas, up nearly 13%. That's on the heels of being down almost 5% last week, Sean. So big swing week to week here in nat gas. Moving on to the dark side, to the bottom half, we got the Eurodollars off about 1.34%. I get that far out there to the hundredths because the Ultra Bond at number 4 there with 1.36% to the dark side. Number 3, platinum, off nearly 2%, 1.9%. Number 2, good old RBOB, off about 4%. And number 1 with a bullet to the downside. So we had nat gas up 12.75%. Now we got to the downside, we got iron ore off 11.3%. So not a good week in the iron ore space. So Sean, I covered a whole broad spectrum there. Or maybe there's something else you're kind of stroking your chin about you want to start at. You are our guest, sir. I'll let you choose. Where should we begin our journey this week?
Let's start with rates.
Rates. Okay, we can do that then. You're an old school rates guy.
I am.
Someone mentioned to me recently, I think it was our friend Rhodes, Mr. Russell Rhodes from the TAB group, said, you guys don't do enough rates on this show. But we hear that all the time. You don't do enough ag. Pick your product, right? Whatever product you're in, that's the one we don't do enough of, right?
I'm picking rates because it is the big driver in equities. So I think we'd follow up with equities following rates.
There's a lot in rates. Anything particular you want me to sink my teeth into, or should we just go for the big dog, the Eurodollar? What's floating your boat, sir?
Yeah, let's go Euros.
Oh, that's your old stomping grounds, the Eurodollars. Okay, we can do that. We can make that happen, sir. Let's flip on over. Listeners, if you're playing along, of course, the place to play the home game, cmegroup.com/TWIFO, TWIFO. If you're doing that, go to that drop down there. You'll see the selection for rates. Go to U.S. rates. Bam, right at the top is Eurodollars. And you're off to the races. Now, I differ with Nick. I like to you all, except I think when it comes to Eurodollars, there's so much already in Eurodollars that it does a nice job there of a nice synopsis of what's trading. If you do view all the list of strikes, you'll be scrolling for days, Sean. So yeah, it's an interesting week out here. Eurodollars, like we mentioned, coming into the show is off about 1%, 1.33% off there. That front future actually off about almost 1.5% now here coming into showtime. And looking here, what's going on out here? Of course, rates. You're an old school Eurodollar guy, Sean, and I talked about this with with Derek last couple weeks ago on the show as well. This is one of those products that it's very hard to convey to a retail audience, a retail audience who likes to tune in, listen, and talk about, your typical things, your apples, your VIX, your corns, your golds. Then all of a sudden you get something like a Eurodollar. You're an old school Eurodollar pit trader. How would you convey Eurodollar to, let's say, your proverbial grandmother from Iowa, Sean?
That's a great question. Eurodollars for the retail audience. You have to think about it from a simple perspective, and that is when rates are going up, the value of the Eurodollar increases, where rates go down, they kind of have an inverted effect in regards to the price because it's 100 minus the rate, right? So you just have to think about it in an inverse. When rates are going up, Eurodollars are going down. Rates are going down, Eurodollar prices are going up. So just from a simplistic perspective, just an easy way for a retail person to figure out what drives the price in what direction.
And all the broad spectrum of things that trade on CME, what was it that made you cut your teeth in the Eurodollar pit of all things?
The option-like ability to trade things like butterflies in times of in the futures contracts themselves. So the very option-like trading strategies that you could put on, because back when I was in there, flies didn't move very much, and when they did, there was an opportunity to capitalize on it.
It's one of those pits that's, even for old school pit traders, I was in the SPX, that's not a small pit, and yet the Eurodollar is just a different beast entirely in terms of size and activity, and in terms of, you had the different colors for the different sections. It was its own beast. Let's see if we can parse it for you a little bit here this week. Like we said, Eurodollars coming at 98 1/8 or so out there on that front future contract out there. It's got looks like about a month to go. Nove is that front contract here. The vol looks like it's kind of a mixed bag with the front kind of couple of terms coming off pretty hard, about 1.5 points and 2.25 points respectively. And then you get beyond that, you get out to Jan, so you get into next year, and the vol actually ticking up a little bit. So that kind of reflects a little bit of that bifurcated term structure we see in some of these rates types products, where there's a clear line of demarcation as to how this stuff breaks down. Let's see what the active month out here was. Decent, with exactly half, 50% of the paper going up out here in the Eurodollar. Remember, when we're talking paper, Eurodollars is a different beast, because we're talking about just in one option, one strike, one call, you're seeing more paper than in most of the other products we're going to talk about, maybe combined. So let's start off here. The number one with a bullet trade this week, Sean, was in Dees. It was the Dees 98 3/8. I love seeing the old eighths again. It's like an old school refreshing thing, Sean. You don't see a lot of ticks and eighths and the old teenies, the old 16ths again.
Yeah, it brings back days of trading equity options. The smallest was a teeny.
Back in the good old days.
In the good old days.
Things were wide and you could actually trade them.
Just don't short the teenies.
Yes. I knew a few guys on the CBOE who used to do that. Whenever there was a teeny bid for anything remotely, irrelevant, they would hit it. Those guys would inevitably change jackets, I'd say, every 3 to 6 months, maybe a year on the outside. They'd always somehow come back. I don't know. Someone else would back them again, but they were always back. But that strategy, it had a very finite shelf life, shall we say. It works until it doesn't. Very true. And when it didn't, it was they usually weren't around a little bit after that. But yeah, I digress here. Let's get into the Eurodollars. 98 3/8 is where the action was. It's kind of the at the money. That was the call side, listeners. Let's break down some of this paper that's going up here this week. Monday was the quiet day, only 3,100 contracts. Tuesday, 78,400 went up with these 98 3/8 calls. Wednesday, 12,000. Today, a paltry 43,700, total of 137,000. Again, listeners, if I get into some of the other metals or even some of the ags, you're not going to see the entire complex doing that much paper, let alone. This is one month, one strike, one call even, not even the entire strike, doing 137,000. That's why I say, Sean, I say trying to convey this amount of paper to anyone on the retail side of the fence, it's a daunting prospect, I think, to say the least. Because look, next strike, 98.25 here, doing 116,000 contracts. I mean, the paper here is just is astronomical. Is that kind of what Massive. You remember from being out there?
Yeah. That the liquidity in the Eurodollar complex continues to be just massive. Both sides of the market, and extremely tight. It's just high volume. And it just trades like no other product.
It truly does. I'm looking here to try to draw some interesting nuggets. Everything is really tight. Everything is around that 98 or so strike for all the most active things this week. I don't see any real crazy outliers. I'll tell you what, I'm going to do exactly what I said I'm not going to do, Sean. I'm going to click the very dreaded in Eurodollars, select all. It's going to take my computer probably a minute to process this much data, listeners. But then we're going to see if we could see any funky out. Here we go. Oh, look, now I'm scrolling for days, Sean. Here we go. But yes, looking for some interesting outlier strikes as we go out and beyond a little bit. Obviously, the months and the different series. You have the greens, you have your blues, you have your reds. Looking here, I don't see a lot of. It's all pretty tight, Sean, around that. Is that pretty normal?
Just talking options, it's usually the case. It's usually at the money's trade the most, yeah.
I'm looking here for some of the outliers, and they're pretty small. Like the 96 and 3/8 puts did 5,000 contracts this week, so not nowhere near what the kind of around at the money. And that's what most options products do that, but sometimes we see little aberrations pop. Let's go to the skew here really quickly before we move out. Again, DEES was where most of the action was this week. Let's look at the skew. The puts last week were cheap. They were 6.2% cheap to the at the money. This week, they're even cheaper. They're 11.5%. So puts coming in here, skew-wise in Eurodollars. Looking at the calls, calls were where the bid was, but that's coming off a little bit this week as well. They were nearly 10% rich, 9.1% rich to the at the money. This week, a paltry, a mere 4.5%. So calls coming in, puts getting cheaper. Interesting things afoot out here in the Eurodollar. Sean, we could spend all friggin' day in Eurodollars if we wanted to. There's enough paper to parse it just on this one page, let alone if I start scrolling. But then other people are going to get mad at me that other complexes aren't getting on the show. So where should we go next, sir, in our endless foray to the world of futures options?
Let's head to equities, please.
I don't know. We don't do equities on this show. You're on the wrong purpose. Yeah. All right, let's do it. Let's hit it. Let's get into equities land. A weird week, a weird day. Kind of come into the end of the week here. It was a lot of mixed stuff. Obviously, everything's been very macro-driven of late. You know, trade war. Now, of course, we have the prospect, a lingering prospect of perhaps a deal in Brexit. So that, of course, boosting the market. Also, I was pleased to see a little bit of the focus returning back to all things micro with earnings on the horizon again this week. So we had some decent earnings. Pretty much every bank you know of on the planet reported this week. We also saw some tech names like IBM and Netflix moving the market north a little bit this week as well. So a combo of decent micro earnings as well as some perhaps optimistic macro news. That combo did lead the market into a bit of a rally today. Most of the indices were up about 0.5% now coming into the later portion, and certainly started this show. They've given up a lot of that now. There were Dow was actually unched coming in earlier in the show. We saw VIX itself at about a little bit shy of 14, about 13.75 or so. That puts it down about 1.25 points from last show. The old volatility of volatility, a.k.a. the VVIX, at about a 92.5. That's also down. It was right around 100 at our show last week. Now we're down to a 92.5. And our old friend RVX, Sean, was really weird because when I was in D.C. and then we did the show again last week from Florida, RVX was almost literally unched. It was like maybe a 0.03 different. And then this week coming into Showtime, we're off over 4 handles, down 4.15 at a 1775. So that was strange. Usually, I can't recall another week where I saw RVX effectively unched like that. Usually it's going somewhere, right? And this week is the case. So was that interesting for you last week to see vol effectively sticky for a week out there in small caps?
Yeah, just looking at the performance of the indices themselves, you saw S&P and NASDAQ just kind of unched and down slightly, but you saw the small cap index, the Russell 2000 benchmark, just in a more of a strengthening mode. It was up quite a bit each of the trading days of this week and last. So that just brings vol in.
Let's see what it brings to the table from an options paper perspective. Listeners, you guys, as always, head on over to that drop-down, cmegroup.com/TWIFO, wherever you're getting access to those tools, and then choose the equities. And then we're heading on over to the Russell 2000 to kick things off. The Russell actually up net on the week here, so a good week for small cap. You know, it's been interesting to watch. Small cap, Sean, kind of moving to the beat of its own drummer these days. You know, the broad equities are off and Russell's up or vice versa. Has that been interesting for you to kind of come to grips with that of late?
It's where I honestly see a great trade opportunity, and Russell 2000 being that benchmark in small caps is a tremendous opportunity. You know, and as the market moves, you'll see the small caps outperform the other indices, but when there's that down move, you'll see them outperform to the downside as well, which brings that famous skew to the downside of Russell 2000. That skew is something people always talk about.
Well, we're going to get to that. I think we have a listener question about that. And looking at this week's paper, I think he's going to have more to say. But let's break down what was going on out here this week. So Russell actually up about 25 handles at about a 1541 coming into Showtime. Now that puts us up about not quite 2%, 1.86%. Not enough to crack into the top 5 this week, Sean. It was a pretty aggressive upside week for the ags and for nat gas out here. Vol, of course, as you see in the equities when you're rallying, vol's coming off again this week. Off pretty firm, too. Looking out here, we got this one-day contract. We'll just ignore that. That's not really vol anymore. But let's go out a couple of weeks here Actually, at least a week to the 2-week contract. Vol's coming in many points, 3.5 points, and going out to the week 1 of Nove, which gives us about exactly 2 weeks and a day or so out there. Vol coming up about 3.25 points as well. So yeah, pretty aggressive hemorrhaging out here in the vol space. We saw that in the broad large caps as well. S&P was hemorrhaging vol. It's like they think the deal's already done in the trade war and in Brexit. We saw this before with the first time Brexit was going around, Sean. It was very infamous on our Volatility Views show. So this is even a couple of days before the vote in Brexit, the first time. And everyone seemed it was a done deal because they took like a telephone poll in the UK, and it seemed like, okay, majority of sentiment was against it, so it's not going to happen. And the markets took that poll as gospel and went out and just annihilated equity vol across the board. And we all know what happened a couple of days later. The vote actually went through and it blew the doors off everybody and vol exploded. Not quite seeing that same degree of, shall we say, dismissiveness in the market, but they are crushing it pretty hard here this week. It'll be interesting to see if we get another crazy vote over the weekend or something crazy happens. And once again, all these guys who were, hitting every bid in the equity space, they may want to keep a little bit of their powder dry for moments like this. Speaking of moments, see what's lighting it up out here, Sean. You know what? I think our listener question, I'm actually going to cheat, Sean. I'm going to cheat. I'm going to bump up. We have a listener question here. He was asking exactly about this. This comes from Chuck. I'm going to bring it up now. It comes from Chuck Mendez. He says, why do you think there's so much downside put paper in the Russell 2000? And on the heels of that, I'm looking here right now, the most active contracts again this week, Sean. Your little roadshow sounds like it's been paying some dividends because we have been seeing some decent blocks going up here, including the big print this week, the DEES 1385 puts. So that's about 160-odd handles or so out of the money here in DEES, going up over 2,000 times. And the 13.5 puts also out here in March of next year, doing nearly 2,000 times as well. So that's exactly what Chuck was mentioning. He's like, it seems like every week, Sean, there's this aggregation of Russell liquidity around these far out of the money puts. You think that's because of that skew you mentioned earlier? What do you have to say here for Chuck? Why do you think there is so much interest in this particular portion of the skew curve here in Russell?
I think there's a strong desire for protection on one side of the trade, but I also think that there's a tremendous opportunity to harvest volatility on the other side of that trade. So you're going to find good two-way flow. The other interesting thing about Russell options are you've got CME's product and you've got CBOE's RUT options, which are much larger in notional value. They're 100 multiplier versus the 50. So you get much more bang for your buck trading the RUTs on CBOE. And I'm sure Rick Rosenthal is going to thank me for saying that today. And it's an opportunity to one, hedge that downside risk, two, to take advantage of that volatility on the sales side of those options.
And looking up here, those 1385 puts there in December went up over 2 days, a couple of blocks of over 1,000 each on Tuesday and Wednesday. And then the 13.5 puts went up all on Wednesday, big block of nearly 2,000. So yeah, there is still a lot of interest, and that was all opening on the March puts there. So opening far out of the money put paper. Just pick a week, Sean. I don't even have to look. I can just pull up the Russell, and I say to myself, I bet you it's a lot of opening out of the money put paper, and that's exactly what it is again this week. So our listener clearly picked up on that. You're a keen-eyed, keen-eared listener there, Mr. Chuck. And I think you're right. I think it has to do with that put skew is a little bit. Let's look at that skew really quickly and see. Let's see. So the action this week was coming in mostly DEES. Let's look to DEES and see what was going on. Actually coming in a little bit this week. It was about nearly 19% rich to the at-the-money last week. In DEES this week, about 18.4. So coming in ever so slightly. And then the calls, they were about 13.7% cheap at the money. This week, 14.6% cheap. So the calls coming in and puts coming in. So that's not surprising. Vols coming in, you're going to see a little bit of a contraction on both ends of the wings there. But interesting stuff. Does seem like I'll have to dig into some of these put trades a little more, Sean, and see if they are indeed opening harvesting or if they're opening buying. What's going on? But someone or some big firms have an interesting axe to grind on the downside here in Russell 2000. They continue to play. So it sounds like Legion of Travel, sir, has been paying dividends of late.
I think so as well. But as I think I've said in many of your shows, folks need to buy puts when they can, not when they have to. And then as vols come in, it gives customers that opportunity to get that protection at a better price.
We could talk equities the whole show, Sean, but we have to move on to other categories as well here. I think we have some more listener questions for you, so don't take your listener question answering hat off, I should say. Easy for me to say here, as I'm many shows deep here. Let's move on to energy. We always talk WTI. Let's mix up the script a little bit, Sean, because last couple of weeks, nat gas has been on fire. First to the downside, then to the upside. Last week, of course, was off about 4.5%. This week, like we mentioned, it was up 12, almost 13%. So big swings in both directions here in nat gas. Again, you guys listeners can follow along. Pull on the drop down there. Head on over to energy and then nat gas. You want to pull that top one up there. That's where most of the options paper is to be found. Interesting week. We even saw some fluctuations intra-week. We saw it rallying earlier on Wednesday, then settling off a little bit. There are still these lingering concerns about a supply glut out there. Even though we're talking about cold weather, we already have these bomb cyclones hitting the Northeast out there, yet that's not enough even to spark it. Yet nat gas up on the week, so enough to overcome those concerns, at least so far this week. And people are looking ahead to the reports from the EIA. They're looking for what they're expecting, a record surge in domestic nat gas stockpiles. And that seems to be outweighing hopes of increased demand. But this week, not so much. It seems like increased demand may be winning the day because we're up again. So it's a crazy topsy-turvy market. Let's see what's lighting it up here this week in this ever-moving product. And it looks like it was indeed the NOVE contract did most of the paper, 53.5%. Going up in this contract that has about 11 days to go. So short-term contract does not keep people away. They're playing. And it's right there. The at-the-money strike is about 2.35 or so out here. And it was the two even puts that were lighting it up out here in NOVE with about 2 weeks. Actually, not even 2 weeks, about 11 days to go here. 34,000 of those bad boys, the lion's share coming on Monday, 20,000 there. The rest kind of evenly scattered throughout the week. Slightly closing, actually. It looks like maybe some people getting the heck out of Dodge on that 2-put strike. Not surprising as we're rallying. Maybe that 2 strike seems like a little bit distant in the rear view mirror. 2 puts also active out there in DEES, doing about a third of the paper going up in DEES this week with about the 2 puts, again, leading the dance out there, 28,000 of those. The lion's share also on Monday, 11,000 there, 8,600 on Tuesday, 5,100 today, and again, also slightly closing. So closing on the 2 puts across the board seems to be the order of the day out here. Let's go out to DEES because we have a little bit more time to parse there and look at what's going on from a skew perspective. Puts actually getting a little bit cheaper there. They were 3% rich to the cheap to the at-the-money this week. They're 3.9%. So again, maybe some closing put sales having something to do with that. The calls getting a little bit cheaper as well. They were about 7.1% rich to the at-the-money this week, 6.6%. So that bid to the call seems like it worked out this week because we had a nice rally ho here in all things energy, all things nat gas. Mr. Sean, what do you think? Should we stay in energy? Should we give the folks a taste of WTI, or should we move on somewhere else, sir? The ball is in your court.
You know, those big moves in ags have me going. I'd love to have some ag conversation, and if Nick was here, he'd probably agree. So right, maybe in the honor of Nick, we talk about some of those big moves, and you know, I'm sure a lot of it's weather related, but those were some interesting moves. So I thought it would be good to look at, like, Oats was up 5, almost 6%, right?
Yes. So ags were lighting it up. That's another product complex, Sean, where the users are very vocal. They've been writing into us and like saying more ags. So they want more rates, they want more ags. Well, got you covered here on the show today. You're right. So we got oats up 5.75% this week, wheat up 6.2%, lumber up 6.4%, and KC wheat up 6.65%. So what do you think? We haven't talked wheat in a while. Should we hit some good old wheat, Sean? What do you think?
Let's go wheat.
Let's do it. Let's go old school. So you're going over to the drop down, going to ags. You're going to grains and oil seeds. Clicking SRW wheat. And let's see, number one with a bullet out here this week. Wheat, by the way, this is the SRW wheat, KC wheat, of course. Moving more this week, but not doing more from an overall options volume perspective. SRW wheat, easy for me to say. 525 is our at-the-money strike right now. So we're looking at about net, actually, a decent rally of about 17 handles or so on the week. Vol up across the board, so a strong upside move contributing to a lot of vol up, pretty much a point and change pretty much everywhere you look. Lion's share of the volume, nearly half, about 48%. Come in here in the DEES contract here, and we're threatening 5.25. It was the 490 put that was leading the dance this week, listeners, doing about 5,700. Remember, this is when I said, when talking Eurodollars paper, we're seeing more volume in that one call strike in Eurodollars than we're seeing in the entire good old SRW wheat complex. That's pretty much the case here again, with total of, let's say, about 94,000 contracts across the entire spectrum this week. So a little bit different beast when we're talking volume here. But still, number one with the bullet, 490 puts. And that was opening as well. It's about net opening, about half of that opening. So interesting, the lion's share come in Monday and Tuesday at about 1,800 and 1,700 respectively. So opening downside put paper, maybe some folks fading this rally, not thinking it's meant to last. Others maybe taking an opportunity to harvest a little bit of the old risk premium over here. Either way, that's number one with the bullet. Very close to it are the 480 puts as well, with about exactly 5,000, 49.99 to be precise here, going up this week. The lion's share coming actually today, 22.76 today, about 2,100 on Monday. The rest kind of scattered throughout the week. Slightly opening there as well. So opening downside put paper in DEES. That's kind of interesting out here, given the fact that we are on such an upside run out here. Let's look at the skew really quickly, see how that's lining up. The puts were cheap last week, and they're still cheap, a little bit more cheap this week. They were about 3.1% cheap. The at the money, this is in DEES again, listeners, they were 3.6% cheap. This week, the calls were where the action was last week, 5.5% rich. That call love was rewarded, certainly with this week's upside move. Now the calls have come in a little bit. That's not surprising. 4.1% rich to the at the money this week as well. I say we can look at Oats, Sean, but there's not a huge, not a huge options contingent here for Oats. So metals, crypto, what's floating your boat out here, sir?
You know, Tim McCourt's been talking quite a bit about Bitcoin in the recent days.
A good game about Bitcoin of late, has he not?
So let's go the crypto route.
They have been making some news out there of late, of course, not on this show, Sean. They announced it a day, 12 hours after the show, that they're the one product I've been bugging them for about 2 years. They're actually launching, which are, of course, Bitcoin options. No definitive date. When I had Derek on, we had Tim on, of course. We also had Derek on recently. I tried to get him a little bit more of a concrete date out of both of them. They're both staying sometime in Q1, so we could have up to about, almost 6 months till these things actually launch. But there has been a lot of playing in that space since then. And interestingly enough, we've seen a lot of players. We just had the folks from Ledger X. We've had others. We saw the launches of Bakkt, and a lot of people playing in that physically settled side of the crypto futures space. I saw people asking CME if they're going to play there as well. Our buddy Tim McCourt coming out here this week, actually, and saying, nope, they have no plans to dive into their physically settled Bitcoin futures yet. Obviously, I think we have a listener question about that, so I won't say too much about that. But effectively, Tim came out and said that they're going to launch their options. Basically what he said on our show, increasing client demand and robust growth. And let's see, looking here for his comments, but that he says effectively they have no plans to follow suit with what a lot of the other players are doing in the space, which is the physically settled type contract here. And you know what? Since we're talking about physically deliverable and we have questions about that, we also have more questions for the Russell. I think let's do it, Sean. Let's keep on rolling into some futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. I mean, the whole show is your show, but this is really your segment. You get to send in your questions, your comments, your insights. We love to hear from you. Keep them coming. We'll see how many we can squeeze on here. Since we're just talking about crypto, let's start off here with a question from 29. 29 wants to know, why is physically deliverable crypto such a big deal? Well, this is something we've been talking about on our crypto show, even on this show a little bit as well. A lot of the new entrants into the crypto space are going that route. They're trying to create contracts that are physically deliverable so you can trade the contract and it actually will expire and settle into the underlying Bitcoin, which a lot of people want. I mean, Sean, you're in the index game. A lot of that is cash settled a lot these days. Can't really have a lot of physically settled indexes. But maybe what do you have to say for our buddy here, 29? Maybe I'll take it outside of the crypto realm. Just in general, why do you think a physically settled, a physically deliverable type contract is maybe interesting to some of the players out there?
I think it's delivery. I think it's being able to take that delivery and complex delivery. I would say the majority of futures contracts that have physical delivery, a real small percentage of them go to delivery, and people take delivery. I think it's more of a hedge and an investment and a speculative vehicle versus being able to actually have that deliverable quality to them. So. I think just in the complexity of delivery, you have to have a lot of mechanisms in place.
Yeah, I mean, a lot of the commodities, like producers and things, like to have that physically deliverable type contract, so they could write these contracts and have it just delivered. And that works well for a lot of these certain contracts. And for crypto in particular, getting back to your question, I think it eases the process for a lot of things, like people who have a big stable. They're sitting on a lot of Bitcoin right now. They can write a covered call against it. And it's nice for them to have that underlying go right into that covered call contract without having to worry about some other issues or weird contract specs or how that relates to a reference rate or something like that. Having a nice one-to-one relationship, write it out, and it could settle into that contract. I think that eases concerns for some funds out there. And that was certainly, I know, a lot of the new entrants to the space. That's what they're hoping. That physically deliverable contract will help lure a lot of the large institutional players who maybe have been a little bit reticent on crypto for some of these fungibility and other reasons, if they can just have a nice physically delivered contract. The hope, at least, is that will alleviate some of those concerns. CME doesn't sound like they're too worried about that because they're not in that race. And so far, at least with the launch of the first little bit of physically deliverable futures we've seen, everyone thought the Bitcoin market might rally. It actually has sold off pretty hard afterwards. So far, at least, it hasn't been perhaps the bullish signal a lot of people were hoping for out there. Maybe that's one of the reasons why CME is waiting to see. Next time I talk to Tim, I'll have to ask him that exact question. Let's see here. DeWitt wants to know, have you guys talked about iron ore on the show? If not, can you add it to the rotation since it's moving? Thanks so much. Well, you are right, DeWitt. It is moving again this week. It was the number one of our dark side movers to the downside, off 11.3%. And to answer your question, let's go back about a month or so. We talked about, in fact, I will do it for you again, just so you can see yourselves, listeners. But we tried to do a deep dive into all things iron ore, for you, so you guys can see for yourself how not exactly exciting it is from an overall options perspective. It's just not an option story. I wish there was. We tried multiple times to try to pull up some sort of options story for you right now, and I'm going through the different products out here right now, listeners. And there are a whopping, whopping no contracts that went up here this week. So it's just not, I've tried many times. I cannot make an option story where none exists. So yes, we have talked about it in our movers and shakers. We talked about it again this week in terms of net movement, but there's not much else we can sink our teeth into from it. There's no options. There's no open interest to parse. There's no real vol movement we can really get into as it pertains to the options. There's no changes in skew. All the things we like to talk about here, number one trades, none of that exists for iron ore. So unfortunately, I wish we could add it to the rotation, DeWitt or Dwight, but it's not an option story, at least not for the time. That changes. We'll be happy to talk about it here, but so far, not so much. Sean, here's a question for you. This comes from L5. And this is something we touched on before on the show, but maybe we need to revisit it again because they're asking about it again. L5 wants to know, very succinctly, why are there no more RVX options? I know a lot of this happened before your purview over there at FTSE Russell, but from your perspective, why are there no more RVX options going on out there?
Well, you need to step back and realize there's no RVX futures today, so you don't have that opportunity to trade a future against these options as well. So to have the options, you need an underlying. I will say that the ability to trade the RVX volatility versus VIX, you'd have to trade the Russell 2000 options today. And we're talking to SIBO Global, the desire for an RVX future, and then graduate to options again. And I'm excited to continue that conversation, but please reach out to Rick Rosenthal at CBOE with your client demand for the products, and CBOE reacts to client demand in a fantastic way.
You'll be happy to know, Sean, and indeed LF5. When I think it's hit the network. If not, it'll hit the network soon. I chatted with Ariane over there at the SIBO. She kind of heads up a lot of those new initiatives over there. And I put the question to her about RVX, and she seemed more receptive than I thought in the past. So maybe there is hope, Sean.
I'm telling you, it's the momentum is heading in the right direction there.
It's behaving so uniquely in and of itself right now, right? That there's enough of an argument just for that reason alone. Maybe you want to. Obviously, the index is out there; it's being disseminated. But it would be nice to have a nice product. And obviously, you're right; the future should lead the way. So maybe, Ella, your question should be: why is there no future first, and then we get to the options? If small caps continue to behave this way, I don't think it'll be. It's not unforeseeable, sir, that we will see a return. I would think.
I completely agree.
Of that, there you go. So you're on the same page.
Yep, we're on the same page there.
You can always tell a genius because he thinks exactly like you. Right? All right, let's bring it home with this one. This comes from just Andrew. Andrew wants to know: can you add a collar report to the show? We identify attractive collar opportunities in products with high call skew, low put skew, and attractive upside potential. This guy just wants us to do all the work for him, Sean. He's like, hey, you just identify the good ones, and I'll go put it on.
Pick my winners.
Yeah, pick my winners for me. That's something I have teased Nick and them about creating some more kind of reports we can kind of feed into the show that do this kind of thing. When we see those lining up like we did very famously in soybeans about a year and change ago, we will, of course, discuss them on the show. It's not a setup that occurs very often, as you kind of mentioned there. You need a couple of independent things to all move in the same direction. You need the calls to be firmly bid. You need the puts to be cheap. That combo alone is not something you see that often. And then also you need, as you point out, maybe a nice, attractive case for the underlying in the near future. So if you want to buy it, it's nice. Then you can put on nice, tight protection, very cheap. You could sell a call a decent amount out of the money, get paid pretty well for it, and on top of that, have a nice room to run with the underlying. That's not a setup you see very often. And you can already take out, a lot of different things like the equities. You don't see a lot of strong bids to the calls very often, so that takes a lot of them off the table. And so there's a lot of parsing. But yeah, that's something we can maybe look into. Maybe I'll squeeze Nick and their arms over there. I'll say, hey, Andrew wants the reports. So, but we do like giving you guys those kind of things we can talk about more on the show. And maybe there's some way we could add something like that. Maybe we could have like a crazy skew report on the show. That'd be kind of fun. So the biggest swings. But we've talked about this before too. People have asked about that before too, if we can do that. And that's, how do you parse that? What's the language you're using there? Is it just biggest percentage moves? Because that could be in some crazy weekly contract that really isn't that relevant. Or is it, more of a comparative? How do you really measure the craziness of the skew move? That's probably the question for that. But that's something we'll probably get to that first, I would imagine, before we have a collar report. And then from there, of course, you guys can do your own homework and take the ones we highlight there on the skew report and run with them for whatever you want, a collar or whatever the heck it is you guys want to trade out there. All right. Unfortunately, or perhaps fortunately, depending on your view of the show, that music means we've come to the end. Sean, it's already been pretty much a whole show. Hard to believe here, but I think you did a good job today, sir. So I have it on good authority that there may be something delicious waiting for you after the show. What do you have to say about that, sir?
It's always great to be on the show. The post-show is going to be fun, but
a whole different thing.
It's a completely different thing entirely. But it's always good to be here. It's always good to go through a nice Russell 2000 small cap recap. Small cap recap. I like that.
I think you just named a new report for yourself, sir. The small cap recap.
I like that. But it's always good to be back. Thanks for having me.
Well, if listeners want to learn more about what's going on in FTSE Russell, maybe they want to contact you about something, or maybe they want to just know what you guys have up your sleeves for the foreseeable future. Any teasers you got for them, Sean? Now is the time. And also, if they want to learn more, where should they go? What should they do?
No teasing to happen today, but my email address is smith@FTSERussell.com. Feel free to reach out to me.
There you go. Hit the man up. He gave you his email. Make him regret it, listeners. Deluge him with all your questions about RVX and everything. Ella and all your other ones. Chuck, who had questions about Russell 2000. Hit up Sean. So even when he's not here in the studio, he can still press him about all the fun stuff going on. You can, of course, learn more. FTSE Russell, FTSE Russell.com is the place to go. Give him a follow on Twitter while you're at it, at FTSE Russell, is the place to go out there. And, of course, speaking of places to go, if you want to kick the tires and light the fires and these reports and everything else, CMEgroup.com/TWIFO is the place to go. You can see all the stuff we're talking about here during the showtime. If you're listening after the fact, just make sure you adjust that date range so you can line it up with what we're talking about here. You can see exactly what we saw here when we were parsing the show. And keep those questions coming. We love to hear from all of you. And we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern. Then we kick it all up again on Monday with the option block. And then we're right back here on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.